Co-founder of Maelstrom, which is the family office of Arthur Hayes. Got a job at BitMEX to help him stand up BitMEX Ventures. BitMEX was the largest exchange globally in terms of dollars notional.
So I was in Hong Kong when BitMEX was kind of at its peak, and I heard a lot of rumors about BitMEX.
It was, at the time, the most expensive lease ever signed in Hong Kong on a square footage basis. So you can extrapolate. It was probably the most expensive lease ever signed anywhere, given how expensive Hong Kong is relative to other markets. People make it sound like it was this Bond villain-esque, like Shark Tank thing. They were sharks, but it was more like a babysitting service. So it was kind of like a CSR thing.
For context, for people who don't know this, their office was also on top of the Goldman Sachs office, which is crazy in Hong Kong to think about. That was also the time I remember FTX was in Hong Kong, and there used to be these crazy NFT launch parties every week. I remember Dragon Eye used to be permanently booked out by like crypto people.
From BitMEX through FTX, and there was kind of the peak Hong Kong crypto scene. All of the other exchanges, Binance, OKX, KuCoin, etc., had their largest shadow offices here in Hong Kong. Some of the first few deals we did ended up being cycle winners. Within the first 6 months of Maelstrom existing, we did EtherFi, which has been super successful, Athena, which has been the highest returning deal of the cycle. We did Aether, that was one of our first couple deals. Also one of the top 10, top 5 returners this cycle.
Almost maximum risk, that's what you guys like to call it. What does that mean, especially in a market like this when everyone's always like, oh, crypto's dead?
Still as bullish as ever on casinos. That's what hyperliquid is, right? It's a casino. That's what BitMEX was. That's what Binance kind of was. So my name is Akshat. I'm co-founder of Maelstrom, which is the family office of Arthur Hayes. And we've been investing predominantly in early stage companies, but now increasingly late stage. And we're in the process now of launching a private equity vehicle.
Amazing. And how did you kind of get started with Maelstrom, or how did you get into crypto as a whole?
Yeah, so I graduated from undergrad in 2013. And I went to the same university as Arthur, but we were a few years apart by over half a decade. And, he, at the time, in 2013, 2014, he hadn't started BitMEX yet. He was kind of dabbling in the world of direct OTC Bitcoin deals, cross-border between China and Hong Kong, taking advantage of certain ARBs. I was at the time working in a consulting firm based in New York. And I was traveling 50 weeks a year, and I was getting pretty exhausted with the lifestyle. But I was still learning a lot and enjoying. So I kind of did my non-crypto career up until 2019, from 13 to 19. But in 2014, the very beginning of 2014, I started dabbling in a little bit of trading on my in my PA. It was at that time the main exchanges were Mt. Gox, Coinbase, and there were a couple of really small random derivative shops. But I would just started buying Bitcoin when it was maybe in the 300s, 400s, and then it had this initial bubble where it shot up to $1,100, and I remember thinking, okay, there's something here. And then it crashed again, and when Mt. Gox went down to the 200 mark, stayed in the 250s, 300s for another couple of years, and I didn't think much of it. And then in 2016, 17, when Ethereum came to market, I started coming back into the space a bit and realizing, you know what, there's something more to this than just Bitcoin as a payment method. Started looking at the concept of smart contracts and what kinds of business models that would enable. And started buying Ethereum in 17, got caught up in the bubble, the 17, 18 bubble. If you recall that time frame, there was the white paper scams, right? Where everyone had a white paper of what kind of business model they would create with smart contracts. They raise money, and then they wouldn't actually create the business. I invested in a bunch of those, probably lost half my net worth at that time. And then, everything crashed again. And I was like, okay, surely at this point, crypto is dead. Like, this is clearly a joke. But, so just observing from afar. During that time, I transitioned from my job in management consulting to private equity. And I was working on buyouts in the Midwest, dominantly old world industries, things that have nothing to do with technology or crypto. They're like veterinary lab roll-ups and trucking manufacturing businesses, things like that. And I started to see that, in the investment space, a lot of stuff was compressing. A lot of the juice wasn't really left to squeeze. And decided that in 2019 that it was time for me to start looking for jobs in cutting edge spaces. And at that time, crypto, blockchain, it wasn't really in vogue, but it was exciting to me. And applied for jobs. We went to the same university, so I kind of used the alumni connection there, and got a job at BitMEX to help him stand up BitMEX Ventures, which was basically the early stage venture portfolio of BitMEX, kind of like, a standard CVC. So did that for 2 or 3 years. We went through the full life cycle of that fund, BitMEX Ventures, got into a bunch of unicorns or near unicorns and exited most of those positions at the peak in 2021. And then FTX crashed in 2022. And then we decided to spin this strategy off into Maelstrom, separate it from the exchange, and that was born.
Amazing. So I was in Hong Kong when BitMEX was kind of at its peak, and I heard a lot of rumors. BitMEX. Oh, okay. So one was that there was an aquarium in BitMEX, like surrounding the entire wall of BitMEX. Is that correct?
Yeah. So if you remember the time, right, this was back when, like, between, say, 16 and 19. It's hard to imagine now because the world has changed so much, even within crypto. But BitMEX was the largest exchange globally in terms of dollars notional. And Arthur and BitMEX were the kings of the crypto trading space. It was kind of like the Binance of the day, or maybe Hyperliquid, whatever. Uh, they moved to a very swanky, nice office in a tier one building in a place called the Chung Kong Center in Hong Kong. And I joined about a year after that. And when I first came into the office, I was shocked. It was a beautiful office. It was on the 45th floor. It overlooked the harbor on one side. You could see Victoria Peak on the other side. And if you can imagine, for someone who's from Hong Kong, which I'm not, spent some time, been in and out of Hong Kong since about 2010, it's kind of unimaginable that a crypto exchange at that time would have such a tier one office. And we had the entire floor. So in the floor, we had one of the nicest private bars in Hong Kong. Um, you can Google just like BitMEX Chung Kong Center lease and see what you find. It was at the time the most expensive lease ever signed in Hong Kong on a square footage basis. So you can extrapolate. It was probably the most expensive lease ever signed anywhere, given how expensive Hong Kong is relative to other markets. It's very likely that it was one of the top five most expensive leases ever signed for a corporate office, known publicly to anyone, anywhere in the world, ever. And in that office, as I mentioned, there's a private bar. There was, standard kind of like Silicon Valley-esque amenities. There was a massage room. No one ever used it, though. It was just kind of there. There was a punching bag. There was a little sports equipment area. There was, stuff that trader types and exchange types, crypto bros, finance types, etc., would want to use. And one of the features that was also present that you alluded to was there was a little aquarium. Didn't quite wrap around the entire space, but it was visible from a few different areas. And it was kind of like people make it sound like it was this Bond villain. They were sharks, but it was more like a babysitting service. So it was kind of like a CSR thing where we look after the sharks on behalf of this organization that wants to conserve sharks, and we pay for their upkeep, pay for their safety, and then when they get too big, the guys swap them out and take them somewhere else to take care of them. So it's more like a fostering service than it was like a nefarious Shark Tank. Awesome.
No, for sure. Okay, so for context, for people who don't know this, their office was also on top of the Goldman Sachs office. Crazy in Hong Kong to think about, you know. That's true, right? It was on top of the
Yeah,
Goldman
yeah.
office.
There was, I mean,
Yeah.
in that building, right? We would walk in. I'd be wearing this t-shirt, gym shorts, right? And next to us is the most highly paid finance professionals at name brand firms. They spent their entire lives working up to this, and they're showing up, dressed to impress. And you got crypto bros walking in the same exact elevator, right? Swiping the badges, going to the same floors, and we'd pass by Goldman Sachs. There was, I think, BCG or Bain. One of them had a major office there. There was some regulators in the same building. It was it was a surreal experience to be able to kind of take this iconoclast mindset to finance and have it in that way.
No, for sure. And what did you think of Hong Kong at the time? Because that was also the time I remember FTX was in Hong Kong, and there used to be these crazy launch parties every week. I remember Dragon Eye used to be permanently booked out by like crypto people. What did you kind of think about Hong Kong when you first moved there, and the crypto scene there?
Yeah, so I moved to Hong Kong in 2019, which was kind of like one of the last good prime years of Hong Kong for a couple of
Yeah,
reasons. That one, when I first came to Hong Kong in 2010, I'm sure you can relate with this experience. Um, Hong Kong was booming and buzzing because, in part, because the Chinese economy was booming. Chinese economy has gone from whatever 9-10% per capita GDP growth annually for 20, 30 years to now like 2 to 3%. That's a massive change. So it's still, objectively it's fine growth. Um, but for a developing country, it's not that great. And that contrast, when you drop 7% in annual growth figures, you feel it, right? And Hong Kong now does not feel like that. It doesn't feel like a boom town. It doesn't feel super buzzy and exciting. It's just like a normal city. And with the slowing of the Chinese economy, combined with the way that the Chinese government handled a couple of things. One, they scared a lot of private capital with crazy behaviors like the disappearance of Jack Ma, right? He joked
yeah,
or insulted a regulator and boom, disappeared for 6 months. Fucking scary. Um, there were arbitrary crackdowns on certain industries. Xi Jinping woke up one day and was like, I'm just going to crack down on this industry and just ruin many livelihoods. A lot of these erratic behaviors started to change the vibes in China, and you could feel that change very starkly in after 2014 when Xi Jinping basically took over. And now you talk to the average high net worth Chinese person, everyone's moving capital out and moving their families out. They're planning for a future where it's like, yeah, I care about my livelihood and my wealth more than I have loyalty to any particular system. So you can see that kind of happening. So you feel that in Hong Kong. So when I came to Hong Kong, it was one of the last good years in that regard. And then COVID was handled very poorly by many governments in the world, but especially poorly in China and Hong Kong, where they took a very unscientific approach, tried to promote like a zero COVID policy, which was doomed to fail. It didn't work, right? Because eventually every single person got it. And there was Hong Kong was trying to do this weird middle ground where they were trying to appease the CCP Chinese system of zero COVID, but then also trying to be true to themselves, which is a free market hub, very independent and pro business at all costs. So what they ended up doing was just oscillating between the two back and forth in the most erratic way, made it impossible for anyone to do business, anyone to come in and out of the country. And so Hong Kong was changing, but at the same time, crypto was kind of experiencing this little swell where from BitMEX through FTX, and there was kind of the peak Hong Kong crypto scene, and you could really feel the vibes. I remember when I first got into Hong Kong, 2019, I was invited maybe like 2 months in to go to a rooftop bar in Causeway Bay, and there was Ryan Salame, one of the founders of FTX, and a few other people. If he wasn't there, and I remember at the time they were like just launching their perps, right? BitMEX had invented the perp, and no one else had really copied the product until FTX did, then Binance did, and then they all eventually did. But FTX was one of the first. And if you recall, FTX Alameda used to be one of the largest client on BitMEX back in the day.
mhm,
So they were like, wait, we can just create the same product and just do a better exchange. That was their mindset. And so when I met them at the time, they were still pretty kind of up and coming. They tried to fundraise from Arthur. He declined at the time, which back then, initially for a couple of years, we thought, oh, maybe that was a mistake. In the end, ended up being exactly the right call. But yeah, I remember meeting those guys and hearing um, some of the, I guess, like urban legends about SBF that, yeah, this man sleeps under his desk every day. He's dedicated to this like altruistic mission. He's a saint. He's a monk, blah, blah, blah. And people believed it. I mean, I had no reason not to believe it, whatever. They're telling me this. Ryan spends every day with him. So if he's saying this, I assume it's true. No reason to
yeah.
needlessly hype people up. But Yeah, there's FTX, there's BitMEX still at the time. All of the other exchanges, Binance, OKX, KuCoin, etc., had their largest shadow offices here in Hong Kong. There's, half the teams were here either formally or just informally, just working here, probably illegally. And it was kind of true to Hong Kong's vibe, right? It's always been this free market trading hub where anyone can come from anywhere in the world and engage in commerce. It was set up by British merchants and populated eventually by Cantonese business people, um, and other business people from the southern China region. So I think that's why crypto flourished at the time. And then eventually, when FTX went down and when Hong Kong's COVID rules just got ridiculous and the whole world opened up, then Hong Kong ceded a lot of that talent, and now that talent's kind of gone global, and crypto's obviously changed a lot since the election of Trump.
Yeah, no, for sure. And I think at the time Singapore was also kind of popping a little bit. So you always have like Singapore, Hong Kong, they kind of go together all the time. So,
Right.
but yeah, and then kind of coming to Maelstrom, what's that been like for you, going from BitMEX, which is obviously super established, everyone knew BitMEX. So from, doing BitMEX Ventures to then eventually spinning that out to Maelstrom, was there a difference in how you approached deals, how people kind of wanted you as investors or didn't want you, or in terms of marketing, how's that been?
Yeah. So when we launched Maelstrom, just a little backstory as to how Maelstrom came about. In 2022, end of 22, FTX went down, right? And the whole world, it looked like crypto was dead again. I hear this every 4 years, crypto's dead. So crypto died, apparently. Bitcoin crashed to like 16K or something like that, and it looked like it was over. That is usually right. Once people have been in this space long enough, that's usually when they get most bullish. So that's when me and Arthur started ideating on, okay, well, what do we do with this pool of capital that we've built at BitMEX Ventures, and um, how do we adapt it for the next cycle? I was in a state where I was kind of like losing interest in CeFi at that time. Basically, I was kind of in a holding pattern. I knew my timeline at BitMEX wasn't that much longer. We didn't really need to have a venture arm. So I started just spending a lot of time just thinking, learning, reading, ideating, traveling. I fucked off for a couple months, pretended to work for maybe about 2 months, and dialed maybe work like 3 hours a week on my actual job, but spent time doing other stuff. And then eventually I came back to Arthur and I said, hey, look, why don't we launch a family office structure that's super agile? And what I pitched to him was the 100-year portfolio. So I was like, look, let's just you're a billionaire, but you're a young billionaire. That's something that's super rare. There are very few young self-made billionaires. Given the horizon that you have, we can build a portfolio that goes after super early asset classes. At that time, if you remember, in 2022, nobody's really talking about AI. Biotech was just kind of a thing, and crypto was in a bear market. So I was like, look, let's build the kind of family office that can go after many different asset classes, get them super early, go after things like water rights, uranium, just get into shit early and take advantage of this time that you have. And we'll build this 100-year portfolio that outlasts you. And he thought the narrative was cool, it was fun, lots of buzzwords in there, but he's like, you're a crypto investor, so just focus on that. And so let's just get started small and build our way up. So I said, okay, let's do it. So I started working with him part time initially in the summer of 2023. Sorry, this was at the end of 2022, initially part time, and the beginning of 23. And then we did a couple deals, things went well. Some of the first few deals we did ended up being cycle winners. Within the first 6 months of Maelstrom existing, we did EtherFi, which has been super successful, Athena, which has been the highest returning deal of the cycle. We did Aether. That was one of our first couple deals. Also, one of the top 10, top 5 returners this cycle. Ended up being really good for us. And at that point, we thought, okay, let's formalize this under a brand name. Arthur gave it the name Maelstrom. It might have a Dune reference, possibly. I'm not too sure. And then we started doing deals under that umbrella. The team has now grown to 7 investment professionals spread out globally, and as I mentioned, we're now dabbling in the private equity space within the crypto category.
Oh, that's so cool. I actually remember because I just joined Aether and then Maelstrom had just kind of, I guess, branded itself as Maelstrom. And then I remember Mark coming in and being like, oh yeah, Maelstrom is investing in us. And I was like, yeah, so it was very exciting for us as well. And then I do know your positioning in itself is almost maximum risk, or that's what you guys like to call it. What does that mean to, especially in a market like this when everyone's always like, oh, crypto's dead, or, now it's AI's time. What does almost maximum risk mean for you right now?
So sometimes in certain cycles of certain parts of the cycle, the best thing to do is nothing.
Yeah.
And we obviously want to buy low, sell high, right? That's investing. So typically when folks are super exuberant and there's like a deal happening every 2 weeks, and you get like 10 days to diligence a company, that's usually when the worst deals are made. But it's the most exciting time, and that's when our portfolio tends to exit, is in those parts of the cycle, because we're focused very heavily on seed and pre-seed, very early stage. So most of the money in crypto is made between seed, maybe pre-seed, seed to kind of Series A. That's when the biggest jumps happen, and then after Series A, it gets pretty saturated. That's when all the large funds invest, the ones who raise too much capital and they have no choice but to deploy at the top because their check size is too big. That's when those guys deploy, and then it'll TGE, and then usually TGE is down here somewhere, crashes down here. But remember, we came in at here, so we make money here. The guys who invested at the top all get fucked. Retail gets slightly fucked if they invest in the initial TGEs, but then usually do okay if they wait a bit. So that's our strategy now as well. That we didn't do that many deals last year when everything was hypey and exciting. We were exiting our portfolio at that time, and now we're back to the drawing board, ideating, learning, seeing what people much smarter than us, which are the founders and entrepreneurs, are up to. There's new types of founders coming in the space because how much has changed in the past year from a regulatory standpoint, from a market structure standpoint, and we're just kind of like staying abreast and seeing what they're building and actively investing.
hmm What are some kind of narratives or spaces that you're particularly bullish on, right?
So all things related to stablecoins and payments are exciting to us, but there's a lot of overvalued stuff right now. So we haven't really deployed much there. We still hold a major position in Athena. We're still bullish on Athena. We're not selling. We're holding, and that remains exciting for a lot of different reasons. But other parts of the stablecoin payments stack also interesting to us. We're trying to understand what kind of scope there is in the agentic space. Don't know, to be honest. Don't have great answers. We know there's something there. People are building, but I can't say I've seen anything right now that this will change the world, at least yet. Uh, Privacy is a huge category for us. We think that if there's ever a shot for another project to kind of rival or be kind of in the same category, the same thesis realm as Bitcoin, it's privacy coins. And we're seeing that now, especially with eventually there's a world where most Bitcoin transactions will be taggable if they're of size, right? Kind of mix of AI tools and other things that make it quite easy to tell who's trading what and who's sending what where. That will probably change with the advent and proliferation of privacy equivalents that are, I wouldn't say competing with Bitcoin, but complementary. And then, still as bullish as casinos. Like, that's what Hyperliquid is, right? It's a casino. That's what BitMEX was. That's what Binance kind of was. But yeah, just looking now, Polymarket, Kalshi, we backed a competitor called Limitless that's doing something very similar. So yeah, casinos will always.
Yeah, no, definitely. So when you're kind of evaluating these deals, also because you guys come in at such an early stage, which is like pre-seed, is it for you a lot more about the founder versus what the company is actually doing? Or what are some things that you evaluate when you're looking at deals?
Yeah. So I think the most important thing definitely is the founder quality. That you're looking for someone who's high integrity, smart but not too smart, capable of leading and galvanizing a team. Um, Usually the same kind of personality that is good at fundraising is typically good at galvanizing a developer team to get shit done, who's also usually good at someone who's good at talking to clients, right? But not always. There's sometimes folks that just laser in on one of those things. They might be really good at getting their dev team to ship product, but they're shitty at talking to clients, or they might be great at talking to clients, but they can't deliver products, or they're expert fundraisers. There's a lot of those in crypto, but suck at the other two. So we're kind of looking for someone who has all three, and probably secondary to integrity. Integrity is number one, because in private early stage businesses, there's a lot of ways for people to engage in scammy behavior. And in crypto, in some ways it's easier, in some ways it's less easy. It depends on different aspects of the business model to do the same thing. But yeah, integrity is number one. Number two is kind of those skill sets that I mentioned to you. And then that's kind of the founder bucket. And we also look at how big the market is that they're going after. So the buzzword people like to use is TAM, total addressable market, which basically just means like, look, if you guys are winning in a category, but the category is this big, it's not as good as being halfway good or above average in a category that's this big. So it needs to be large enough of a like the buzz. Another buzzword is like venture scale, right? It's another way of saying big enough to matter. So yeah, is it venture scale? It can actually become something that generates enough cash flows to then drive valuations up and for us to be able to exit. Paths to liquidity is very important to us. A lot of crypto investors don't do that because their incentive structures are kind of fucked up. So when you raise a crypto fund, um, you raise from LPs and you say, look, I'm going to return your capital in whatever 5-7 years, and you typically will raise before you'll do your next raise for your next funds before you get a chance to return that capital. And the track record that you use to raise that next fund is halfway through, and usually about halfway through, the fund returns look great because it's all on paper, right? So I've invested in 10 projects. They've all larger investors came in and shot up the valuations. It's now 10x, but I haven't seen a penny of that yet. But on paper, it's gone up 10x. Now I go to other LPs and say, hey, I'm raising fund two with this much larger AUM that again is not liquid, but okay, on paper it looks much bigger. So the other LPs are super excited, like, wow, you 10x your fund, amazing. Okay, now we're in for this next fund, and you kind of keep doing that. And the way that these funds are structured, you get paid based on the AUM. So the more capital you raise, the more capital you have, you get basically like there's typically between 1.5 and 2%, maybe 2.5% in some funds, management fees annually. And that's how you pay salaries and whatnot. And usually the GPs will have a cash flow sweep where at the end, they'll sweep all the remaining management fees that are not used. So that tends to be their main revenue driver for them individually. And that creates a system where the goal isn't necessarily to return capital as much as it is to keep fundraising. And
Mm.
you can see that with the results of many funds. The results are pretty shitty. Actually, if you look at the average VC fund outside of crypto, it's pretty bad. In crypto, it's pretty bad too. And I'm an LP in like 6-7 funds and shitty. Most of them. I've only re-upped like 2 funds, and I'm excited about those ones. But most of them are pretty shitty, especially the big ones.
So,
So you know,
you know, what you just said, where the returns have been really bad for you, but why do you keep investing? Is it to get access to deal flow, or like what's the thinking behind?
yeah. So initially, I started investing in these in like 2021, 2022, and it was because I didn't know better, to be honest. I wanted exposure. I wanted to like learn best practices. I wanted to get access to deal flow. And in the end, none of those things came true. And what I saw was a lot of wasted capital. And half these funds returned less than half than what I put in. couple of them did well, and those are the ones I re-upped in. But that's the typical model. And we're very different in that we're a family office. So I only get paid if Arthur gets money back in his bank account. So we're structured. So that's kind of the longer backstory as to why paths to liquidity is the third most important. So founder quality, TAM, paths to liquidity, three most important things that we look at in an investment.
Oh, super interesting. I think, I've had the same experience. So I used to, before I got into crypto, I was working at a traditional. Yeah, I didn't really see a lot of potential in venture capital because most funds are just not returning or doing anything meaningful. It was just about eating management fee all the time. So yeah, and I think the last few questions that I have for you is so now you're kind of the vision's expanded into actually raising like a private equity fund or growing Maelstrom into a private equity fund. So is that more around like a growth fund, or is it do you also want to like acquire companies and things like that?
Yeah, so Maelstrom, the venture fund, and the liquid fund remain. There's no change to that strategy. That's going to keep going. What we're also separately raising for right now is a private equity vehicle that will acquire majority stakes in off-chain businesses. So
Mm.
on-chain stuff, it will still just be Arthur's prop cap. Keep investing, doing what we've done all along. With the private equity fund, it's all of the off-chain businesses. So you kind of imagine, right? There's like trading infrastructure, there's payment infrastructure, there's data and analytics plays, there's all kinds of businesses that are pretty profitable, but they have no token. That's what we're targeting with that.
Interesting. Is it because, what's the thinking behind it? Is it just because kind of coming back to your initial thesis where you were like, oh, I want to kind of go big and create that 100-year portfolio?
Well, it's a sign of our bullishness in crypto, but it's a undertapped part of crypto in that typically normal businesses outside of crypto, they have like a full life cycle, right? You have seed investment, then after a few years, the initial founding team will take an investment from a growth equity shop, like a private equity shop, who will come in and say, okay, we're going to invest $30 million. We're going to create a formal board. The founders are now going to be kind of more like mascots. We're going to bring in professional management. Then it goes for a few more years. Then comes in the later stage growth equity investor to do it much bigger, becomes more professional. Then eventually a buyout shop will come in and buy the entire thing and then tack it onto something else they have, or it'll IPO, right? In crypto right now, all we have are these founder-led businesses that kind of get stuck there because none of these other capital providers exist. There's no growth equity shops, there's no buyout shops. So you have businesses that are founded and then 6, 7, 8 years later, it's still the same founding team. It's like 18 people, half of whom are developers. Maybe only a fourth of them are doing real work. The founders are tired. They don't know what to do beyond what they've done for the first couple of years. Most of their random growth initiatives have failed and the business model hasn't changed. But the business is still profitable, it's still a good business. They just need that same kind of life cycle that non-crypto businesses have. That's where we come in, right? Where I have a background in private equity prior to crypto. There is a founder and an operator himself. He knows how to run these businesses. And the third partner of this private equity fund, he comes from a Wall Street private equity background in the US. He was at a couple of major private equity firms for about half a decade, not a crypto guy, but we brought him in into the crypto side to basically help us run this team. So the idea is that we come in as the initial outside capital for these off-chain businesses, help the founders basically retire, right? Give them like an 18-month runway. Okay, you're going to get transitioned off. You take your money, you go enjoy your life, buy your island, do whatever. And unlike an acquisition by Binance or Coinbase, where in those cases they get paid like 60-70% stock. They have to stay on board for 4 to 6 years. They get a boss. It's basically just a promotion, right? It's not a true exit. In our case, it's actually an exit. So we can come in with much lower valuations, but they're still more attractive to the founding teams because it's cash heavy. And we have no competition because there's no buyout funds focused on this category. So we can buy cheap. and the founders are still better off because they got more cash than they would have with an exit to a strategic. These guys, sail off into the sun, and then we bring in our professional operators. We've got a bench of people who can run businesses, who have done it before. They've done this inside of crypto, outside of crypto. They've done it with a variety of different business models, and they run these businesses better for a few years, and then we go and sell these to strategics in 3, 4, 5 years.
Oh, this is so interesting. I love the idea behind it because I also meet founders all the time and they're just like, we don't know what to do now, you know? Like the token's been out in the market for a while, the product's nothing's really coming of it. And then they're just like, what do we do with the token? You can't, like, once the token's out, you can't, get it back in. And so you have a community, you have to keep doing things, but then nothing's working out. And they're just like, we're lost. And
what do you do, right?
yeah,
And especially for
yeah,
off-chain businesses where there's no token even, right? Then that's
yeah,
like,
true.
it's even more so the case that like they don't have the same tools that token guys do. So for them, this is the next logical step to exit to
Yeah,
us, and
yeah.
then we run it better and sell it.
Yeah, no, definitely. And the last question that I have for you is what are you personally excited for in 2026, 2027, apart from, or even including the things that you mentioned before, which is more around privacy, AI, stablecoins, but if there's anything else.
Yeah, I mean, I mentioned the off-chain private equity space. Obviously, very excited about that. For me, I'm looking forward to taking a little bit of downtime to kind of become an 8-year-old on the internet again. So when I was,
Mhm.
let's say, between the ages of 7 and 10, this was back in the end of the 20th century, right? It was like kind of the turn, it was around Y2K. The internet was a wild and fun place. It was completely disorganized. Google did exist, but it didn't really work that well, and it wasn't really optimized. There's no Facebook, and there was no Instagram. There wasn't like these centralized platforms where everybody engages with the internet all in one place. It was highly decentralized. If you find a cool website, if you didn't bookmark it, you would never find it again. And there was just a lot of crazy stuff on the internet. It was super fun, and we were just like ideating, and we were, as kids, learning how to code for fun, because not because we wanted to learn how to code because someone told us it'll result in a job. It's more like we wanted to update our Zanga profiles and make our like our bios look cool and pretty. So we just figured it out. We was like, okay, we have to use HTML to add like a star next to the name and things like that. It was kind of like this playful environment, and I think one of my visions for this year is to take some downtime to do that now with all the suite of AI tools that exist, and become an 8-year-old again and just fuck around and see what I can create. And that's a luxury to have that kind of time, but I'm hoping to make the effort to create that time.
Oh, that's so cool. I think those were all the questions that I had. Thank you so much for coming on. This was great.
Yeah, thanks for having me.
Thank you for listening to Off the Record. If you like this episode, like, subscribe, and leave a review. It helps the podcast grow. You can find more episodes wherever you get your podcasts. See you next time.